What on earth does the Fed do with this one?
So thanks, John. 4 takeaways, including for the Fed. One, on the labor market. This is not just a solid labor market, but if you take these numbers at face value, it's a strong labor market late in the cycle. 2, for the economy, it speaks to U.S. economic exceptionalism, something we've seen and something that's continuing. 3, for the Fed, it means push back much harder against pressure from the markets to put you in the single mandate box. Enough talk about inflation is dead. Inflation is not dead. Enough talk about the Fed should only be concerned about maximum employment. It should still be concerned about its dual mandate. And finally, for the markets, I think this is pushing back against what has been, in my view, and you've heard me say it over and over again, an overly aggressive expectation of rate cuts by the Fed. I think this will get the market closer to what's likely. And then we're going to have a debate on 2 things. One is, where's the neutral rate? And 2 is, how do you think about this economy in terms of growth and employment? And how are these 2 things coming together? So, at face value, this is a report that will cause a lot of revision, both in analysis and in market pricing. But I stress, it is part of a much bigger picture of mixed data. And that's where the complications arise, John, as you know.
Mohamed, Emory nailed it when she started saying, how much does this have to do with the 50 basis point rate cut? And it's somewhat tongue in cheek, of course, but at the same time, there is a real question. How much have the easier financial conditions that have basically been manufactured by this Federal Reserve helped boost a market that wasn't maybe in need of such a big boost?
Look, my view, we've been living in a world of liquidity dominance. It has been all about liquidity. That world was reinforced by a 50 basis points cut. Let's also remember that the market didn't expect a 50 basis point cut based on data. It expected it based on a reporting on the Thursday before the Fed board meeting. So there was no economic conditions that would justify 50 basis points, but there was a leak to a newspaper that moved market expectations. I worry that we continue to feed this monster of liquidity dominance. And at some point, we may regret it, either because inflation will not settle at 2% and or because financial instability will result from excessive risk-taking.